Now we'll go into the foreign exchange here. I will be not only covering the major currency pairs, I will also look at some of the other peripheral major pairs which I didn't cover the week before. Here, the major news, of course, is the same news that has been impacting the bank stocks. Here we have the dollar going lower, largely on the fear that the Federal Reserve what you call that independence will be affected by the subpoena. Okay, here we have Trump trying to muscle his way through the Federal Reserve, basically trying to bully the Federal Reserve to cut interest rates, and uh, uh, his so-called target has always been the chairman of the Federal Reserve, Jerome Powell, and this chairman only has a few more months to go before his term actually expires in May of this year. But that is not uh, 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 it is not basically uh, not allowing the Trump to actually try to bring him down before his term is up. Okay, so by and large, we can see that the dollar actually come off on Monday, but it recovers to close slightly on the high side by the end of the week itself. Okay, here we have the dollar also being buffered by something else that's happening in Japan. Now, we all know that the Bank of Japan has been on a rate hike cycle. This is very much in contrast to the rate cutting cycle in the United States. So, in terms of monetary policy, the two central banks are in divergent, with the Bank of Japan wanting to hike interest rates, whereas the Federal Reserve has been cutting interest rates. And that means that the interest rate differential between the two currency will actually narrows, and that will have implication for the yen carry trade. And we can see that despite the hawkish outlook for the Bank of Japan, the Japanese yen has been losing ground. So much so that there is fear that it will shoot past the 160 to the in dollar yen. Okay, so it means that as the yen falls below 160 to the dollar, the fear of intervention by the central bank is actually very, very real. Because the last time the intervention happened was when dollar yen was nearing 162. Okay, now what we see that for the week itself, the high traded was 159.45, very, very close to 160. So market especially FX traders are getting very, very jittery about potential intervention by the bank. Here we have the dollar index, which is a basket of currencies of US major trading partners. We have the euro, sterling, Canadian dollars, Mexico pesos, Japanese yens. So those are all in a basket, but the biggest component of the basket is the euro. So we can see that unlike what we saw the whole of 2025, we knew that the dollar actually fell by about 10%, okay, from the start of 2025 until it ends. So here you can see that the dollar has been gaining strength for the last 2 weeks of trading from a low of 97.75. The market now is at 99.38. Okay, so there is a little bit of a rebound in the dollar, and if this situation continues, it does look like there's a potential for the dollar index to continue to trade higher with focus around 101.90 to 102.90 levels. So if this continues, because where we are now is just below 100, and if the market can go to 101.90, there is quite a bit of room to go. Okay, so it is not suggesting that the dollar is going to be very, very strong, but at least technically speaking, we should be expecting a rebound, which will continue all the way to 101.90 at the least. Okay. So in terms of euro dollar, this is basically a mirror image of the dollar index. Like I said earlier on, the biggest currency of that basket that make up the dollar index is the euro. So if the dollar is rebounding, obviously we will be seeing the euro versus the dollar is coming down, which is exactly the case. Now the market actually peaks here at 118 this into the dying days of 2025. Okay, but the high traded whole last year was 119.19. So here we can look at the possibility of a trace out of a potential three-way pullback, targeting anywhere between 115 to 140, 114. Okay, so if this continue to trade lower, it could be seen to be a technical pullback with very strong support around this red horizontal line here at 114.75. Okay, so expect some kind of support to come in here. If the market continues to trade lower, that could be inviting some kind of support. Now, in the sterling, we can see that the price structure looks very, very different from the euro versus the dollar. Here again, we have the same thing. The sterling actually peaks about 3 months before the euro dollar peaks. Okay, here we have a high of 137.90 before pulling back to 130 and then bounce back to 135.67. Here again, we are seeing prices are beginning to come off with immediate target near term at 132.79. Okay, so by and large, we do expect another pullback, continuous pullback, very much like what we see in the euro dollar, with the potential to actually push back all the way to challenge the 130 levels. Somewhere between 128 to 131 to be where the market finally rests. Okay, so if you ask me if there's going to be any opportunity, I think there is. The thing is that it is not fantastic. There are better places to put our money here. Okay, for dollar versus the yen, because the yen has been weakening, it means that in the chart here we should be seeing prices going higher. What goes higher is not the yen, but it is the dollar. The dollar is strengthening against the yen. So we can see earlier on, I did mention 159.49. So this has been the case. The market now is coming very close to 160, and in fact, traders are getting very nervous about the prospect of an intervention, because the last time the Bank of Japan intervened, the market fell from just under 162 all the way to 139.90, which is more than a 2,200 pips fall over a period of 3 months. So that was a very massive move. So we can see technically market has been supported within this rising channel here. Prices now is on the upper end of this channel. If near term the market drift lower, there's a possibility of market moving towards uh, uh, the the middle of the channel here. Okay, so anywhere between 156 to 157 could be where the immediate bottom is, based on the fact that it is a midpoint in the rising channel. Okay, dollar Swiss has been the favorite currency to go to in terms of the Swiss franc. Where we saw how the dollar has been losing ground the whole of 2025, investors had the money somewhere else. And when they look into the European economy, they don't like what they are seeing. Uh, Therefore, most speculators and investors has actually parked their money in Swiss francs. So Swiss franc has been gaining ground. So what we are seeing here, the dollar has fallen against the Swiss franc. It means the Swiss franc is strong, okay, relative to the dollar. And the low traded, the whole of 2025 was 0.78. See twice the market did come back. Again, most recently in the dying days of 2025, it came down to 0.7862 before it started to bounce. So for the last 2 weeks plus, you can see that the dollar has been gaining ground. But by and large, I suspect that this market, as far as current, as far as dollar Swiss is concerned, this market is going to be stuck within a very narrow band between the lower end of 0.78 to the upper end of 0.81. So anywhere between this 300 pips range, the market is going to go sideways with really no incentive to do better or to do worse. Dollar Canadian has a little bit of a rebound, largely because of commodity prices. And we can see that by and large, the dollar has actually been falling quite a fair bit against the Canadian dollars. Now it hit a bottom of 136.42 in the dying days of 2025 and has been rebounding. The high traded was on Friday at 139.29. So does it mean that we can see higher prices? Not necessarily, because we have the counter trend in place, okay, which suggests that we may be looking at lower prices instead of higher prices. And if we do see lower prices, the first target will be anywhere between 133.90 with expectation of further losses into the bracket of 126 to 129. Okay, this is the shaded area here. Now, I've also included in this week presentation dollar versus the Sing. Okay, the Sing dollars has been one of the more stable currencies for the 2025, very much in the mold of the Swiss francs. Okay, so the dollar has basically come off against the Singapore dollars. It means the Sing dollars has been very strong. Okay, so the low traded in 2025, the beginning of 2026, you can see it's at 127.90, and it continued to show that the dollar has pulled back some ground. But by and large, if the dollar continues to weaken, we can see that the Sing dollars will be one of the beneficiaries. Likely to be the case is that the market is going to be stuck between 127 to 130 or 131. So upside potential, there's always a possibility of further gain towards 131. At the bottom here, somewhat of a floor has been established at 127. Okay. So we also include in this presentation this week the dollar versus the ringgit. We all knew ringgit has been one of the best performer in terms of the currency for the whole of 2025. And here we can see why the dollar has actually peaked and been coming off. The low traded in the dollar versus ringgit is at $4.03, with the potential that if further losses do actually unfold, there's a possibility that the dollar versus ringgit may actually weakens all the way to 4 cents against the US dollar. It means the potential for further gains in the ringgit is still very much in play. Okay.